All right, stock market analysis. We're going to get into this in depth. Matt has got some great work here. He's going to take a deeper dive into the 2-hour charts, talk about the key levels in there and what the expectations are. I think this is a great way to set up my analysis. So make sure you don't scroll forward because part of this whole analysis this week is the work that Matt is going to share with you right now. So Matt, show them this great work.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. In this brief segment, I'm going to take a look at the current short-term conditions in the S&P 500, which were posted in yesterday's daily snapshot. Before we jump into the analysis, I'm going to give you some quick background information on the daily snapshot. The daily snapshot is published each trading session a few hours after the market closes, and it's included in our premium levels 1 through 4 plus. The primary objective of the daily snapshot is to use the askSlim methodology to establish high probability scenarios based on a combination or sum of the evidence using our cycle analysis, momentum analysis, and swing high, swing low techniques at multiple time frames. We're not here to make market predictions because there's no certainty, only odds. All right, so let's go take a look at yesterday's daily snapshot. Do that now. Okay, so yesterday's daily snapshot is right here. What you'll notice is that in each report we have 5 sections, and we provide this information for each one of our indexes. So we have our technical summaries, which a comprehensive overview of the technical conditions. And then we have our custom charts, our 2-hour, our daily, and our weekly charts. And these are reviewed and uploaded in every report. We also include in the daily snapshot our outlooks on the upside and the downside, and we do that for the short term, the intermediate, and the longer term. We also provide a technical evidence comparison for the indexes so that at a glance our members can see the relative momentum and trend conditions at multiple time frames. And finally, we provide a cycle analysis table which has the details for our daily and weekly chart cycle analysis. All right, so let's zoom in here and take a look at some noteworthy technical highlights that we posted in the daily snapshot for the S&P 500. So yesterday's close below this 39.54 level, along with the reversal scout turning negative, has suggested that the odds have increased for a daily cycle peak occurring on 117.23 at 40.15.39. Now, what levels would be needed to be breached for us to reevaluate that a peak has been established? Well, that's where we are looking at near-term resistance, a zone from about 39.50 to 30.89. Now, if that level is breached at 39.89, that would suggest that a new leg higher is likely underway and a peak has not yet been established. So let's go examine our 2-hour chart for a better visual representation of this technical analysis. All right, so here we have our 2-hour chart. And what we are looking at here is the peak that has likely occurred. And to give us a little bit more context, what I'm going to do is I'm going to overlay our cycle brackets onto the 2-hour chart so we can see all the information that we need here. All right, so in terms of a peak likely been established, what we are looking at here is we have 2 momentum indicators, a reversal scout, which is this green line that shifted negative on the 17th, and then also we had a close below the slim ribbon, the third band of the slim ribbon. This all occurred within the key short-term resistance zone and also inside of the early to mid peaking phase. So the typical area where you would see a peak in the daily cycle, all of this price action has occurred, again, increasing the odds that a peak has happened already in the S&P 500. Now, however, because of the magnitude of the prior advance, which essentially retraced nearly 78.6 of this prior decline, along with the fact that there is a good amount of time remaining in this peaking phase here, which stretches out to about, what we're looking at here, to about the end of the month. Because of those factors, the magnitude of this advance, plus the fact that there is still some decent amount of time to go in this peaking phase, we are watching for some upside levels here in the near term, a resistance zone that runs from about 39.50 to 39.89. And if this level was breached at around 39.89, then that would suggest a new leg is underway and a peak has not yet been established. If the SPX fails to resume this upside advance and closes below the short-term 61.8 right here, this would open the door to some additional downside risk, including a revisit or break of the prior daily cycle low, which was over here. So again, if we don't see an advance which pushes through this key near-term resistance zone here in the next week or so, and we first get a close below the 61.8, then the odds have increased that a peak is in place and there is increased risk to the downside where a retest or break of this low, those odds have gone up. So those are the key areas on the upside and the downside that we're looking at. Hope this review of a piece of the analysis from the daily snapshot was of value. Make sure to take advantage of our special level 2 trial offer. We look forward to having you become part of the askSlim community. All right, back to you, Slim.
That's great. Let's get into my analysis now. This is the stock market analysis. I'm going to start this a little bit differently as I'm going to look at the VIX. The reason I'm going to do that is because we believe in doing our analysis based on the core aspects of our analysis, which are cycle analysis, momentum analysis, and swing high, swing low analysis. It's an amazing combination, and as you have seen, gives us a great feel for any market that we look at. And we look at correlations and inverse correlations. VIX, of course, is inversely correlated, and our work had shown that the VIX was likely to be moving down into the late January period, and that's why we thought that the S&P 500 would be moving up into that period. It says SPY here. I'm actually going to look at SPX. So that you can see the work that we share with our members, level 3 and level 4, and of course what's included in the daily snapshot that Matt puts out. So let's start out by looking at the VIX. This is a weekly cycle chart on the VIX. I'm just going to blow it out a little bit further. Those vertical lines that you see in there are where the cycles bottomed. The single vertical line tells you where the minor cycle bottomed, and the double vertical line tells you where they nested down over here. And you could see this is where the low nesting was. This is where implied volatilities were declining and the market was stronger. This is where implied volatilities were rising and the market was weaker. So you can see here as the minor cycle rallies that it exploded to the upside as the stock market fell hard back in the end of 2021. Here you could see all of 2022. Here's that half minor cycle low right there. Here's where this one nested here a little bit later. Here is a little bit later also, so there may be a little bit of a right shift going on. And this is the ideal expectation for where this trough comes in. And we had talked about this coming in somewhere around the mid to end of January and potentially leaking into February, where the low in implied volatilities would come. Now, when I look at the daily chart, that tells me that the bottom in implied volatilities is really coming in between these two cycle timing lines that you see right there and right there. And it tells us that it's around somewhere around January 25th to somewhere around February 7th as where the ideal low would be formed, somewhere in that range. And you can see right over here the short-term trough right here where that came, and right here. And these are the ideal cycles that you can see. Beautiful cyclicality here, as this is the reality of how the cycles were formed. This is the ideal cycle right over here. And there is a short-term trough pending right over here. In other words, implied volatility is moving down right in here. Now you see this is the very end of the cycle. Look right over here what happened. You can see a few days where the stock market fell, implied volatilities ticked up, and then there was a capitulation in implied volatility, or a last rally in the S&P 500 or the indexes. That's the same thing as right over here. You see there's a similarity here or here where there's a final move to the downside in implied volatilities. That looks like where we are right now, and that would be a final move to the upside in the stock market before the stock market period of risk comes in. And these higher implied volatilities are due out into February and March. You can see that back here on the weekly, we're projecting, maybe up to 30 out here in this period, and maybe even well up into the 30s and 40s, and even higher than that. And then after that, implied volatility should be falling again. So I don't really have this projected perfectly out in time. It would probably be something like this, because we're looking for the bottom to come at the end of March, beginning of April. So that would take you up here, maybe up to 38. This one would be, I'm just bringing this back in time properly. As you can see, maybe getting up to 30 here. But again, we're looking for those peaks to come sometime in the late period of March. And then what would happen would be this minor cycle would then be pointing down again out here into May. So there would be a steep upward move in implied volatilities to March, and then this decline out into May in implied volatilities, which points to a rally from March, April, May when you look at that. So it's kind of a bigger picture when I'm looking at these implied volatilities. So here is the side by side on that. You could see the weekly, which is getting ready to bottom in implied volatility, the daily, which is getting ready to bottom, and that is suggestive of a peak coming in the stock market. So now let's just go to the daily, and I'm going to switch this over to wait one second. We'll get this over to SPX. There we go. And we're going to look here at these last cycles right there. And you can see the amazing cyclicality. These ovals, these yellow ovals, show you where the period of risk is. And I'm bringing something new in that I shared with our level 4 members just the other day, and that is the minor 1/3 cycle. In other words, this cycle right over here, you could see it's clearly made a low here, here. That's 1/3 of the dominant cycle. That is now lost. It's disappearing, and cycles occasionally go invisible and get taken over by a more dominant cycle. And there's a half cycle right there. So here's the half cycle low right here, and it's beginning to turn up. Here's the half cycle low right over here, and you had that big upward move that failed. You can see that there. And here's the half cycle low right there. So this half cycle is really coming in. So our level 4 members, level 3 members, this is the first time I'm explaining this, I believe. So this is important. So we're in this rally right over here. And this, as we said, the VIX is likely to go down now for at least a few days. This is probably the attempt right over here. You see this evening star that formed there? That is a good indication that the market has peaked at that point. You can see where the market peaked here. That's called an inside down right there. This is an evening star right there. And you note the inverted head and shoulders here, and the measurement, it exactly made that right there on that bar, and then made it a little bit further. I think that, remember that what we said was that the rally right over here in January, getting up into this level right over here, was a high probability. This following this green line and getting up here to close to 4,100 was a low probability. This is really confirming that to us, that this is a very low probability now, and the highest probability will be a rally up into this area right over here, back into these resistance cell zones, maybe not even making it back up to this level, but it could. That was around 40.14. Right now it's at about 39.31. But when this is over in this next few days, then it's likely to begin moving down again. So this is a short-term analysis, but it's actually taking in this next cycle here. And this is the cycle here that has synchronicity with the March low that we're expecting on the weekly chart. And that means that all of that risk right over there is going to be coming in. If this fails here below this low and then comes down and gets down to the 78.6, that's 38.15, that will really confirm that this next rally is going to fail and move down sharply. So we're going to learn a lot right now. But this rally that we're seeing right now, or this uptick, that comes at a time when momentum is still strong in here. You see the slim ribbon PO on the bottom. This is about to give you an up arrow, which is an upward momentum resumption. You can see when it did that right over here. And by the way, this is a level 4 proprietary indicator. This gave you a good signal, and it resumed to the upside again when that happened. You can see when this signal came on the downside, it warned you that there was going to be a downside resumption, and that's what happened. So the slim ribbon PO, along with the slim ribbon, is just a remarkable pair of indicators. Now I want to tell you that the slim ribbon is now available on Tastyworks. So please do let Tom and Tony know that you're excited that it was on there if you use the Tastyworks platform. They'll be glad to hear that, and I'll be glad you told them. So this is a condition which is suggestive that the market will be moving up again into this yellow oval, the period of risk, and then be moving to the downside again. If this falls deeply, it's going to give us a good message. If this remains shallow, it's going to make this upward movement over here have a higher magnitude, and then, but nothing I don't think can avoid what's coming out over here into the February and March period, which is likely to give you a sizable downside move. When I think, as I said in the beginning of the show, investors will be capitulating and probably making the lows for the year for 2023. That's a look at the short-term view. I hope that you didn't scroll forward and miss what Matt told you about the 2-hour charts. I want you to make sure if you did that, you go back and see, because I think that's really was an important part of this analysis. So I want to make sure that you saw that. For those of you that are watching this clip on YouTube, YouTube seems to be having a little bit of a problem because they put out a low definition clip first when we put it up at 480p, and then they upgrade that to 720p. But for some reason last week, some of them didn't get done, and I've heard that they have gotten slow on some of that. So if you're seeing 480p, I really think it is an issue for YouTube, but we're going to keep investigating that. That's the end of what I'm going to show you now. Just want you to please go to our website, click up on the Learn More button on the top, and if you're brand new to askSlim, a great way to learn what we do is to get our 1-month level 2 membership with all of this content for just $29.50.